G'day everybody, welcome to the weekly journal update for the 16th and 17th of June. Just a quick reminder, general advice only in this presentation. Now, a bit of a summary of the action for last week, but really what happened last week may well have nothing to do with what happens in the coming week. We've got the Greek elections today, and that really is the important point. It has the potential to move markets either significantly up or down. And I suspect that markets probably will have an initial reaction to that outcome, but that reaction is likely to be short-lived, I suspect, and the bigger picture trend is what we need to be focusing on, and that's what I want to concentrate on today. But just recognising that in the short term we could get some significant volatility. But it's hard to anticipate what that volatility might be, so my comments today really are more aimed at where the more established trends are. So just looking at last week, the S&P rose by 20 points on the week. That was really all of the last two sessions and a bit as well, so it really did finish quite positively. And it basically reached the 1344 target, which I'd identified last week. There were two target areas, 1344 and 1363. So 1363 still possible, but after that I believe the odds favour more downside from there. The only thing that would head that off is if there is a significant amount of monetary stimulus by the ECB or by the Federal Reserve. Now the VIX index back down towards 20. Now my charts haven't updated for Friday night's data at this stage, which is a bit annoying. So we'll just have to try to imagine a little bit where the candles run to. But the VIX certainly came back down, indicating that there's not a lot of fear in the US market, which is, I must admit, a little bit surprising. Now our market lost 6 points on the week, and really it was a week of very little action. It was just up and down, not much happening either way, and it just seems like no one's taking any big bets on anything. Now last weekend I talked about the GDP numbers that came out in Australia and how I felt that they'd been initially interpreted as quite positive, but when you look behind them there was really only a couple of slim parts of those numbers that actually did look robust. And through the week, the CEO of Myer, Bernie Brooks, made some comments that he'd never seen the market this bad in 30 years, and that he couldn't see any change in the next 2 to 3 years. So I think that really sheds a more accurate light on those GDP numbers. The consumer numbers that everyone got a little bit excited about were basically not in discretionary retailing at all. It was really spending more in other areas. And it also looks like we may have seen the top of the mining boom in terms of commodity prices. Iron ore prices have come off. Copper prices have come off a little bit. I don't know that they're going to, I don't subscribe to the view that they're going to collapse, and even at these levels most producers are still quite comfortably profitable at this level, and I think that downside has already been priced into most of the stocks. So longer term, I don't think it's an issue, and there's still a huge capital investment pipeline coming over the next 2 to 3 years. So there's still a lot of increase in volume to be pushed out there, particularly in iron ore and coal. So I think for the mining service companies, it's probably still pretty good times for them, because I think the amount of work that was in the pipeline in terms of new capital investment was probably beyond their capacity to service it anyway. So if you take 20 or 30% off the top, they've probably still got some very, very buoyant years ahead of them. And most of the mining service companies now have really got most of 2013 revenue targets basically already locked in contractually. Now bond yields spiked up, and this is why I'm quite amazed at how well the US market did, because Spanish bond yields went to 7%. They eased off a little bit. Excuse me, finished about 6.8, but these are levels that are really indicative of a massive problem. And I'm really surprised that stock markets were as calm as they were about it. So, Spain obviously going to have to accept the bailout. They're not calling it that, but it's obviously what's going to happen. Italian 10-year yields also went above 6%, which is not a good sign. They were down in the low fives not that long ago. So bond yields certainly not looking fantastic, and I think there is still significant volatility going to be arising out of Europe. So my overwhelming feeling is that this is not a time to be getting significantly and aggressively long the stock market. Now the US dollar has been trading in a band. We'll have a look at these charts in a minute. Been trading in a band between 81.5 and 83.5. It got up to the top. It's now dropped back down to the bottom. And I think there'll probably be some fairly significant currency moves, I would expect, once the Greek election result is known. So at the moment we're just caught between those two support and resistance levels, and the near term is just so dependent on what happens in Europe. Now gold rose $49 on the week. Anything at all is possible at the moment, and particularly with precious metals, the way that they are manipulated around, but certainly, as you'll see, rebounding very nicely from oversold. And basically, I think gold is a little bit at the mercy of the expectations about what the Fed and the ECB are going to be doing. Silver moved up slightly on the week. It's not quite following with gold at the moment. Oil rebounded a little bit to 84, and we've got clear technical and fundamental support around about the $80 level. Pretty hard to see crude falling much below $80 because there's a fair amount of evidence coming through now that even the Saudi producers really need $80 a barrel. Copper finished back up a little bit, basically currency effect, it would seem, back up at 342, but look, these are still extremely profitable levels. And it's encouraging that copper is holding in the face of such negative sentiment about what's happening in Europe and global growth and all the negative that's around, and copper is holding up quite well. So let's have a look at some of the charts. And that's extremely annoying. I've just lost Market Analyst. Just bear with me 1 minute while I crank that back up again. Okay, so this is the S&P 500 index, and bear in mind that I don't have Friday's data. It hasn't come through at this stage. So we finished up here at 1344, so I'll just put a little mark on the chart here. So we finished the week just there. So you can see back up to the top of the Bollinger Bands. 1363 is also possible. If we just pan back and look at this Fibonacci scale on the left-hand side here, then 1363 is still a possibility. But you can see in the short term we've got a bit of an uptrend happening, but I believe that once this peaks out, and if you look at this on an hourly chart as well, it's really showing signs of a series of tops. I believe once this tops out, whether it's here or whether it's a little bit higher, I believe we'll then start a move to the downside, which will probably last a couple of months, I suspect, the way that things are playing out. The US dollar index, as you can see, it's just moving between these two support and resistance levels, 81.5 and 83.5. And again, we're missing the data from Friday, but Friday closed down here at 81.6, so almost on that level. Now let's have a look at gold and silver. This is silver, not on a daily chart, not a lot of change on the week. But there was gold Friday night, so I do have data for gold. So closed up at 1627, and if we look at gold on a weekly chart, it's also, you can see it had been quite oversold and rebounding from that oversold level. So gold not looking too bad at all. Now let's just have a look at our market, the ASX 200. If we look at this first of all on a weekly chart, you can see we weren't particularly oversold, and we've really just been holding these levels now for about 4 weeks. Hasn't been a lot of change in the market during that time. Just a little bit of volatile action up and down, but other than that, nothing much has really changed. And that is all I wanted to show you this weekend. It's really heavily dependent on what happens at the Greek elections. As I've said today, I expect that we'll see probably some short-term volatility, and then markets will settle down, and I believe that the pattern will probably tend to be more negative than anything else. But anyway, we'll just take it day by day, and I'll see you again next weekend. Cheers.